Hi, my name is Jamus. I'm an economist, and this is my investment resume. I'm an associate professor of economics at the business school, and I'm also the chief economist emeritus at Third Rock.
So good afternoon, Jamus. So today you'll be answering some questions on your investment resume. So what got you started on investing?
Well, like most people, an interest in the subject led me to decide that I wanted to put some money to work. But of course, as you can see from my choice of profession, a big part of what I do is thinking about wealth allocation, portfolio allocation, and returns on investments.
So what was your first investment?
It was, in fact, an investment in an index, in this case, the S&P 500.
So did you make any profit from this investment?
Well, as anyone will tell you, the profitability of an investment depends on your time horizon. As it turns out, I bought my first shares in this not long after I got my first job, and that was round about 99 and 2000. You can imagine how that went.
So if you could turn back time to then, so what would you wish you have invested in?
The question is never whether you invest in something else, at least when it comes to an index. The question is more the discipline to hold on to the investment over an extended period of time, especially if your investment horizon is relatively long. At the start of my career, it should have been relatively long, but I had not gained a certain amount of discipline to keep with a buy and hold kind of strategy quite yet.
So what has been your biggest investment mistake?
Well, this was probably an aspect of active investment right when the Greek crisis was playing out in 2011 or 2012. I made a macro call and decided that there was going to be a bottom. I was right about the macro call, but unfortunately, for those of us that have been looking at the Greek stock market, you realize that stock markets don't always respond in the way that your macro call suggests. And so it turns out that I'm still somewhere in the red when it comes to that particular investment.
So what is your personal investment strategy?
Well, a good idea is index investing with perhaps, if you wish, a layer of asset class or geographic exposure that is layered on. So for someone round about my age, something like a 70-30 portfolio would probably make sense. And like most humans, I have some exposure in real estate as well.
So how does your expertise in economics influence your investment strategy?
Well, in addition to what I suggested earlier about not necessarily trying to beat an index after fees, another area which really makes sense for the average investor is to ensure that you have a diversified portfolio.
So what are 3 factors you look out for before making an investment?
So one factor that I think is really important is to consider one's liquidity needs at a given point in time. So obviously, if you have liquidity needs, you would want to make sure that your exposures are currently more liquid in nature. A second factor is to look out for potential mispricing opportunities. Again, this starts to reek a little bit of active investing, but I think when major opportunities come up and one is extremely convinced of the extent to which there is a mispricing, one can always make a decision to take a punt. The third area where one could think about is if one has sufficient conviction in one's current exposures to then go ahead and do some cost averaging.
Can you name us 3 investments that are currently on your watch list?
Since I'm talking about index investing, I don't have any specific investments. Whatever one decides to take on, whichever specific indexes one has chosen, the best idea is to invest and then forget.
So is there any type of asset class that you would recommend?
Now, unsurprisingly, it is indexes. But here I should point out that there are many types of indexes, and most academics, such as myself, would probably point to looking for indexes for which management fees and costs are minimized as much as possible.
So what does money mean to you?
Well, money ultimately is a means of buying freedom, freedom to be able to pursue one's aspirations and one's dreams, and in a certain sense, money is a means to be able to spend additional time, which is ultimately the true asset that most of us have, with the things that we care about and with the people we care for.
So what is your biggest money fear?
One of them would probably be overthinking it, by which I mean when you have made a decision to take on a given exposure, it's inevitable that, like all risky assets, there will be quite a bit of volatility. So the concern here is one starts to question and potentially try to reverse the decision, which can of course happen at the worst time possible when the returns on your assets would have collapsed. So by and large, I would suggest not overthinking it, sitting back and let your investment ride over an extended period of time.
So how are you planning for retirement?
Well, my family has exposure to target date retirement funds. Given the fact that we do enjoy our work, that target date tends to be quite some distance in the future. Moreover, like many people, we also have exposure to real estate, and that's certainly one of the other nest eggs that we have set aside.
So what is your definition of financial freedom?
This could be a bit prosaic, but for me it's genuinely being able to go to a place like a supermarket and being able to pick up what I would like without necessarily feeling the need to constantly check the prices and be constrained by a budget.
So what is your advice to younger investors?
Well, especially if you are young, in your early 20s, then you should realize this tremendous magic that is underlying the compound interest. So start young, be disciplined, put aside investments and put aside money for investments, and to just keep doing that in the disciplined fashion over a long period of time.
Thank you, Jamus. So finally, can you share with us your investment motto?
Sure, it is start young, keep at it, and diversify via indexes. So what I mean by that is take advantage of the power of compound interest, start young, be disciplined in the process of investing month after month, year after year, and minimize your costs as much as possible by taking passive exposure to indexes, and if one wishes to diversify along geographic or asset class lines, to do so as much as possible also via aggregate indexes.